Good morning from the US. It's very nice to meet you all. My name is Anders Rodenberg. My accent is from Denmark and Sweden, but been 10 years in the US. As a quick introduction, and the reason it's relevant, I guess, is due to the topic. I've always worked with data for many different areas. So first financial risk and tax and transfer pricing, then a lot around anti-money laundering and sanctions, cyber risk, and then lately around ESG and sustainability. And this is really the main topic of today from an investment perspective. But yeah, I will just share my screen here. I sort of represent Denominator, which is at the core, just like we heard, there was a carbon provider and a biodiversity provider. Think about us as the provider around the social aspect of ESG. So if you're seeing the slides here, again, I used to be head of North and South America for Moody's, the rating agency, and my office was on top of MSCI. And again, I know the industry quite well. And what was fascinating sitting and seeing the developments when everyone went into sustainability or ESG was that everyone was talking about the planet and climate. Really, the overlooked aspect was around people. So you have people and planet equals sustainability, but the people aspect was missing, or the social component. So that is sort of fundamentally how you can think about Denominator, is that we're delivering the quantifiable standardized data on the S. So just like the environmental is carbon data, it's biodiversity data, it's water data, just like we saw from Lucy. This is essentially the component on the social piece. The social piece is also different things like human rights, health and safety, consumer protection. We have data on those, but we believe that the biggest piece is again around human capital, people, diversity, equity, inclusion, and this is what we're going to focus mainly on today. But there is, of course, data on the other aspects. But we also basically serve two markets. We serve in the sustainable investment piece, where people are looking to go into the S. But I think what is very interesting, and as I'll get into on some of the use cases, we're talking about asset management and wealth management here as well. There is a big disruption coming for everyone in this industry because a lot of the boomers, those generations of the older people, are essentially retiring. Some people are dying, so there's a massive wealth transfer happening. It's actually around $70 trillion that over the next 7 years will be transferred from, you could say, older generations to millennials and Generation Z. Why this is important, I think, for everyone on the call is younger generations. I'll include myself in it, even if I'm not technically there, but at least heart and soul is young. But we're used to Netflix, we're used to HBO, we're not used to going on the TV Friday evening at 8, and then it's the TV channel that decides what we see. And the same is happening here in asset management and wealth management. The younger generations and the new type of investors that are coming to market with a lot of actually the largest share of the investable pool, they are used to customized products, they're used to customized solutions, and they care more, which is why the asset managers and the wealth managers that are going to capture and win on this sort of general trend is those that can offer more customized portfolios in that. So this, of course, means all the traditional stuff around financial risk, around carbon, around water, around biodiversity, but to a large extent also around the people side of this. So again, I'm not going to bore you with too many slides, but because it is essentially just a database, if we are to dumb it down. So a database covering all countries all around the world, all industries. What is quite unique is that it's not just on board level, but it's also on the executive level, middle management, all employees, and a lot of the policies. This is actually very important on the social aspect because historically there is, from an investment perspective, a lot of focus on board level. But if you care about the social issues, or you want to change that, or you want to see the alpha around it, actually the executive level, middle management is where you see a lot higher correlation between good performance there leads to general good performance for the company. But yeah, so truly global, all industries, those three levels, both public and private, because we cover more than 3.5 million companies. So it's all the large publicly listed, but there's also a lot of private companies in there for the supply chain use cases. But maybe a quick note on what diversity, equity, inclusion means, because many have talked about this. Many would say we already do it, but when you start scratching the surface, it often stops at gender on a board level, because again, many people have wanted to do more, but they haven't been able to find the data, and this is really where we fit into the picture. Because again, it's also age, it's sexuality, it's race, ethnicity, it's educational background, socioeconomic upbringing, disability. It's really all the different aspects that makes us all act and think unique. So there's 15 dimensions of that. So essentially, you can think about these 15 dimensions on an executive level, on a board level, on a company level. And then it's almost like a box of Lego where you can put it together however you would like. So in many ways, this is not really new. Most of asset managers and others, you ask them, what is your credit risk in your portfolio? They would all be able to answer it. Today, what is your carbon exposure, or the exposure to oil and gas or biodiversity? Again, most have started to incorporate this. And again, biodiversity is very similar. Again, go back 4 or 5 years, no one really talked about it, did much on it. And today, most people understand how crucial this is, and they're able to include that in their investment analysis and ownership decisions. So in many ways, this is not something new. It's just getting it even more granular. So we can do the same on gender. We can do it on race, ethnicity. We can do it on age. We can do it on disability, sexuality. So maybe one big takeaway here is that it is now actually possible also with race, ethnicity in Europe. Don't have time to go into all the details on how the data collection works. But the good news is that that is essentially some of the challenges we've unlocked on getting that, so that we're not just having race, ethnicity data on a few companies in the US, but you can literally take a global portfolio and look into these. So I guess the big question is, why does this matter? Again, we talked a little bit about the wealth transfer. But I wanted to share another example of how the data is being applied currently. So it was actually used for an analysis of the entire Danish retirement savings. So of all the larger asset owners and pension funds, how they had invested the Danish population's retirement funds from a diversity, equity, and inclusion perspective. And the results that you're seeing here is essentially how much of their portfolio is invested in the worst performing companies. And by worst performing, it's meaning relative to their country peers. So it is not to say that you cannot invest in companies with less than 30% women, because then it's very hard to invest in Japan. It's actually not very inclusive, because in Japan, for historical and cultural reasons, there just aren't that many women in. But if you're investing in Japan, maybe you don't want to invest in the bottom quartile of the Japanese companies that are performing on a gender perspective. So the percentages you're seeing here is the percentage of the worst bottom quartile performing companies within their portfolio.